Hello, everyone. Happy Sunday. Simon here with AvaTrade, and we are having our weekly webinar, your weekly trading plan. I'm welcoming all of you back to this webinar, and of course, for the new visitors, just a few words about this webinar. And it's very simple. We're just trying to create a structure, trying to create a plan, and you plan your trade, your plan works for most of the successful traders. And in anything, especially in trading, it's good to have a plan, direction, structure, so you can be more organized and potentially have better results. Before we go any further, as usual, I would like to read the risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you can find the full disclosure statement at avatrade.com. This is how to keep in touch with us and take advantage of a lot of information and tutorials and webinars posted on our YouTube channel. And of course, you can follow us on Twitter. And agenda is very simple. We'll go through indices, forex, commodity stocks, and before that, we'll try to see the big picture and see, what's waiting for us in the upcoming week. So, what's waiting for us in the upcoming week? Let's see what we're dealing with still. COVID is still there, even though a lot of countries are lifting some kind of restrictions slowly. It's still an issue, but it looks like it's getting a little bit softer. And we have, for the past few weeks, if not more, we have Russia-Ukraine conflict, and it is kind of fluctuating. First, it was President Biden speaking about that Putin is ready to enter Ukraine. Then last week, they had some good news that the Russian troops or some of the Russian troops returned to the base. Then they said it wasn't the case. Instead of that, more troops were added. And then there were some exchange fires still going on in Ukraine between the separatist zone and Ukraine. And some say the Russia should kind of get on the side and so on. So it's a lot of things, a lot of uncertainty, a lot of negativity. Biden speaks again that Putin is ready to enter. Some putting the dates again. They said the 22nd of February is the date and so on. The truth is, we don't really know. And market is reacting to it. We'll see in a moment how and what was affected in the past week and possible scenarios for the upcoming week. And let's take a look what's happening as far as economic calendar. Again, I always repeat it, I say it again. If you'd like to take your trading seriously, make sure that you prepare for the week. Check what you're trading, check the events and announcements coming from certain countries that your trading is taking place in. What I do here, basically, I just take out the high impact events, and the calendar is full of other things that might be relevant to you. So we have on Monday interest rate decisions from China. We have manufacturing PMI from Germany and European zone, and service PMI from UK. New Zealand is reporting on monetary policy statement and interest rate and press conference. That's on Wednesday. Also, monetary policy report coming from UK, important number. GDP numbers from US on Thursday. And Friday, we have retail sales from New Zealand and durable goods and from US. That's what's happening the upcoming week. Now, very important to say, Monday is the President's Day in US. So the stocks are not going to be the US stocks or US stock markets. They're not going to be open. And the bonds also not going to be open. It's government holiday, so those things are going to be closed. And I just want to quote something from the article that I read from Barron's, written by Ben Levinson, and I quote: "The only thing standing between the stock market and the full-blown correction might have been a long weekend." And it follows: the S&P index fell 1.6% this past week, while the Dow Jones Industrial Average dropped 1.9%, and the Nasdaq Composite lost 1.8%. So the predictions for the upcoming week are not that great. And let's switch now to the platform, and we'll take a look what's happening. And we'll just take a look at S&Ps, for instance, and we'll see how we are really selling this. Let's take a look. This is the week, right? This is the, I think we spoke a couple of weeks ago that this drop, and then we were consolidating. And I mentioned that if or when we break the low of this initial move, the selling might accelerate. And that's exactly what's happening. So that's the market. And what he mentioned in the article, the long weekend, that's exactly uh, what Monday brings a closure of the market. So comes Tuesday, we might see continuation in the sell-offs. A lot of stocks sold really heavily, big names. We'll go through them in a moment, but I just want to go through indices first. Another thing that it is all over the place, the analysts are talking about, is something that called a dead cross, and that actually belongs to Nasdaq. And we did have a dead cross. That's basically when the 50 moving average, that's the green line here, crosses below the 200 moving average. And they said that the last time this was happening, it was in April 2020, and that's exactly what it is. Now, the timing of it is really not the best, but it is signaling a bear market. And here, uh, because of the drop, it's just my opinion here, because of the drop of that's when the pandemic was announced, the COVID was announced, we went fast, and the moving average just caught up a little bit later. But after all this move to the high, this is the first time is actually we're seeing the cross. So technically speaking, it creates a lot of alarm in the trading world. So this is one of the things that a lot of analysts are talking about, and that means that in upcoming days and weeks, the selling could get intense. And let's take a look at other indices. So we said S&P. S&P is selling as well. We are below 200 on all the US indices. Now the 50 is below 100. It's still not below the 200. That might happen. Dow Jones, similar idea. We are below all the averages, and the 50 is below 100, but it is not crossing 200 yet. And let's take a look at European indices. This is the French index. It doesn't look as weak as the US markets. By the way, there's also a lot of opinions that there's a rotation going on, that the money flows from the US stocks that are selling into European stocks that are considered to be potential. So that's why we could see that European indices are really holding a little bit stronger than US. And so this is French FTSE. It's been very strong. It's above all the averages now, and it's not really showing a panic there. DAX, it doesn't look as strong as FTSE, but we still are below the average, but we are holding this level on DAX around 15,000. So let's see what this upcoming week will bring. It is technically it is ready to move lower, but we are holding over here. So the moment we start closing below 15,000 is kind of a psychological level. We might see a pull in lower there. So that's, and this is Nikkei is also weak below all the moving averages, and Nifty 50 was sometimes I make fun of it. It is below the 50 and 100, and it's between 100 and 200 moving average. Last time we bounced, we actually a few times bounced off 200 moving average, showing the strength. So I guess we will see another retest there. So in general, again, Monday, the stock market and the bond market is closed, and it's going to be, I guess everybody will be waiting for Tuesday for reopening of the exchanges in the US and see how the market will take it. So far, if we take a look at, let's take S&P as a general thing, market on Friday has been selling. At the end of the session, it tried to bounce but came back. So we closed almost at the lows, a little bit higher than the low of the day. So again, I think I mentioned it last week when Friday closes below Thursday. Usually the Monday starts or continues the same way. Now the stock market's closed, so we would transfer probably to Tuesday, but that's potential. Anything could happen. So the indices, downside pressure. Let's move to specific to individual stocks, and one of them is Cisco. Actually, it is strong when everything else is selling. Cisco really reported pretty good numbers, and the stock gapped up, and the next day it continues. So when the market was selling off, Cisco was moving higher. I guess all this sell-off and the short squeeze is happening here. We'll see what happens next. But as far as the stocks, it's one of the strongest one on the falling market. It's very important to notice that. Walmart also reported good numbers. Into the numbers, the stock was selling for a while, and then it jumped. They reported on Thursday before the market, and before the market opened, and all session was higher. And Friday was a positive day, even though we gapped down a little bit. Now, Uber, it's worth watching. Remember, I try to bring this every week. This move happened when the CEO was interviewed on Bloomberg, I believe, and he said amazing things for the stock. Then the stock sold. Then the earnings came pretty good. We went higher. Then we sold again. So we are back at the support level around 34, 35. Let's see if we hold it here. And in the long run, it doesn't look on the week. It does look on the weekly chart also as around support area between 33 and 35. Let's see what the upcoming week brings for this stock. And another one, Underarm. It's really sold out. And prior to this, there were some good predictions for this year for the stock, and the stock sold. And on the weekly chart, it looks like it's finding, it could be finding a support around here, around 16, 16 and a half. So let's see if that's the case. We might have a nice bounce over here. And if not, it might continue lower. Now, I just want to go through all the big names and see how they really acted the past week and past days, and to just prove something. When the market is selling, even the best stocks are getting pulled in into sell off. This is Apple, Microsoft, Tesla. Now Tesla is a very key point here. We kind of playing with a 200 moving average. Last time we bounced, and now let's see what happens. And here, meanwhile, the 50 is crossing 100, which could mean a little bit to the down pressure. And let's take a look at Boeing. Boeing also selling, and we're approaching around 204, 205 support area, we had few attempts here, 1, 2, a lot of actions here, and last time we bounced from this level around 205, 204. Okay, so Google, strong selling, Amazon selling. So all the big names are pretty much sold. Facebook, it's just falling without stopping, actually. And let's take a look what's happening. We crossed on weekly chart, on a weekly chart, we crossed all the averages again. And we are also at the key levels here around, of course, 200 is a even number, psychological level, but last time we bounced, there was this level around 204, 205. So the low here was 206, 207. So let's see, we are around 204, 205. If the market really continues heavy selling, we might see continuation, or at some point, a stock like Facebook could attract buyers, and this is very important to see how it acts in the upcoming days and weeks. Next thing I would like to look at is commodities, and that's of course Russia-Ukraine related. Let's take a look at crude oil. Crude oil had very interesting session on Friday. It moved as low as 89, and then it shoot up to 92 area. So that was a very interesting range. And of course, potentially oil could go lower. Some investors saying that if the conflict is resolved, the oil will not be falling anyway. It will be holding around 90, and they say, or some of them say, that that's a fair price for oil at this time. Also, the parties involved, they are pushing for taking the sanctions away from Iran, and I guess they have interest in oil as well, because the moment the sanctions will be lifted, if they reach the agreement with the nuclear power there, that the Iran will resume selling oil, that would add a little bit to the supply. So let's see how that plays out. But as of now, oil is trading between 89 and 95. We had kind of a double or triple top here, depends how you look at it. That was a 4-hour chart, sorry. We had a top here on 95.80, and from that price we slid below 93, and we are holding around 92 as of now. Natural gas is playing its game. It's been very choppy. A lot of investors are really kind of confused. The traders are happy, especially day traders, as they like this roller coaster up and down. That gives them the ability to enter a few times a day and catch up nice moves. But as far as the price, we're sitting at around 445. We closed, and it does look to the upside as we're making higher highs and higher lows. This is the trend line that I draw there. So let's see what happens in the upcoming days. It is strong anyway, and it might continue higher, or at least make higher lows before the continuation. It is looking to the upside. Now, as far as gold's been very, very strong in the past few days. The moment we broke this level, the previous resistance, 1850, 1855, we just shoot up and we are holding. So this was the Thursday action when we touched 1900. We haven't been there for a long time. So last time we were there is June of 2021. So we are strong in holding. Friday they tried to push it back, but we came right back and closed at 1897 and a half. So let's see what happens. A lot of it to do, of course, is it's a safe haven. As we said, when the risk of trading comes in, the money flows to gold. Also, the bonds, the yields for the bonds that went down from a 207 peak to about one. Let me just take a look really quick. The bonds, the closed price for the bonds was 193, and the high was on the same day, it's 207. So it was a nice drop, and that's what caused. For 2 weeks, we tried to break out of it for 207 on the bonds, and then the yields went down, and the gold shoot up, and it is holding. So we'll be keeping an eye on the bonds, of course, and on the market, of course, and see what's happening next in gold. Judging this move, we are on the way to retest this level from which we bounced to the downside, and the high here was 1912.62. So 1910, 1912 level could be tested in the upcoming weeks, and let's see if we're holding that. So that's as far as gold. Palladium had a move, and it is holding. This is the weekly chart. After this nice move, we are holding, and it looks like it might continue to the upside. Let's take a look at the soft commodities. And I mentioned that the moment the Russia and Ukraine issue became hot, it gave a little bit of a boost to soft commodities. As we know, Ukraine is a big exporter of corn and wheat, especially. So let's take a look at corn. This drop down was actually in the same day when they announced that some of the Russian troops are returning to the base, and then when the opposite news came back, we just came right back to the same level. So it is very strong. Wheat, a little bit choppier than corn, but it is holding. And soybeans are the strongest. As we said, out of three, it still remains the strong. It was a correction, and then we made a move right back where we started. So the soft commodities continue to be strong. And of course, just to remind, we spoke about it, the Baron said at the beginning of the year that this is the year of soft commodities. And one of the reasons they're moving up is the energy prices are skyrocketing. And of course, now with the threat of Russia-Ukraine war, it's just adding more reasons for them to run to the upside. Okay, that's it with commodities. Let's take a look at the currency world. We start with the dollar index. And as you know, every week I talk about 96 level, with key level from which we play. And we are above it again. Just bring a simple chart. So dollar index is about 96 again. And let's take a look at the major currencies, what they did. Euro is, it rejected the 14 level, 114 level. We're back to retest 113. And we are in the middle of this range here between 112 and 114. We're right in the middle around 113.22. And the dollar continues moving higher. And of course, not to forget to mention that the whole focus is actually on the Feds. And the upcoming month, we should see the first increase. First, it was priced in 0.25%. Then, since the last number of inflation, the CPI numbers, the chances are increased for the 0.5%. And now there are different opinions there, and they say if you know, they need to really, they say they need to act fast, and if they only cut 0.25%, and that means they're going to have to increase the speed of raising. If they raise 0.25%, they will need to increase the speed, and maybe we'll see more increases than planned for this year. So that would potentially increase the value of the US dollar. And of course, if you could see, as the euro is acting really weak, every attempt to go higher is really changing to a sell-off. British pound, on the other hand, it looks pretty strong here. We had a strong week. We had pretty much have 3 green weeks, and we are holding above 135 level. So until we go back in below 135, we won't see a selling here. It is looking strong, and of course, we'll be watching the inflation data from UK. Australian dollar is weak. It's holding below this level of resistance, 170.60, and this drop was not covered yet. It took 1 day to drop and 3 days to climb back, and we're still below the top of this candle. So if the dollar continues strength, we might see a continuation, and this time it might be a little bit stronger to the downside. And New Zealand dollar, similar picture over here. And I just want to bring again Japanese yen and the currencies involved with Japanese yen, and you could see that the moment the market sells, the yen is getting stronger, and that's another one of the safe haven together with gold that we said when the market sells off, the money flows into yen, and you could see how immediately in this case it's Aussie sold against the yen, euro much weaker, sold stronger against the yen, New Zealand dollar also sold, but for some reason it actually was strong on Friday. So this upcoming week we have interest decisions from New Zealand. Maybe somebody knows something, and we might see an interest increase. And it looks a little bit stronger here. Canadian JPY also sold, and we're actually facing a nice level here of possible support. Pound yen as well sold. So again, keep in mind that's another one of the instruments to pay attention. Currency pairs involved with yen could be a good play when the markets, the equity markets are facing a sell-off. So that's as far as Forex. And let's take a look really quick at Bitcoin. Everybody's watching it. And take a look. We spoke about last week how this level is going to be a key level of 44.5. And we had few tails. We even closed about it one day, and then we dived right back. And it could be that we'll be continuing selling till this support here around 37,000. If you look at the weekly chart, it might go even lower if we do break this 37,200 level. So a lot of actions there, a lot of tears, I would say, or some people are happy, and it depends on what side you are. Investors are happy that they have advantage of buying it lower. People that got caught in buying at the highs are probably crying a little bit now. So it's a lot of emotions, and this is the nature of the instrument. Like I said last week, some analysts are saying that the Bitcoin will fall to 10,000. Others say it's going to go to 100,000. That's why it creates a lot of excitement here. So we'll be watching in upcoming days. But as of now, on this move, logical thing could happen that we go to the lower range of this channel and then bounce from there. We're right in between, so we'll see what happens. So again, just to summarize and kind of create a mood for the week, Monday is closed. The U.S. market is closed, as you know, is the most traded, the most value happening on the U.S. market. So all the world markets are going to be feeling it, and it's going to be slow out there. And then Tuesday comes back, we might see continuation to the downside of the U.S. equities, and that something to be ready for. And as far as commodities, gold is holding after this move up at 1900. We might continue to see the move higher. And inflation is being watched really, really closely, and that data or date of 15, 16 of March is really coming soon, and that's when the first interest rate increase will happen. So I wish everyone a great weekend, and get some energy, stay safe, stay healthy, and we're going to have an amazing week in front of us. All the best. Take care.